Hello everyone, my name is Shubh Sharma and I welcome you all to this part 2 of Understanding Financial series. Now in yesterday video we learned about how to read cash flow statement, how to interpret cash flow statement, and after getting a positive response from all of you all, I decided to make a part 2 video, and in this video we will learn how to analyze balance sheet. Now, balance sheets tells you a lot about the company. It tells you how much loan the company have, how much asset they have, where they are investing. All of these things will be in the balance sheet. And in today's video, we will learn everything from beginner to advanced level for balance sheet. So without wasting any time, let's jump into our analysis. So the company that we're going to look into is ICICI Bank. Now to get to balance sheet, just click on this balance sheet here and you will come into balance sheet. Now in balance sheet there are two segments. Now first is liability and second is asset. Now in balance sheet, how do we conclude liability? In balance sheet, the liability means where the money is coming from, right? Now to run a business, to run a bank or whatever industry that you are looking into, to run a business needs capital. In liability section, you will understand where the money is coming from. And in asset side, you will understand where this money is being used. So now in balance sheet, you will see total liability. Above everything is liabilities and below is asset. Now first thing is equity capital. Now what is equity capital? Equity capital means that company is issuing fresh new shares and investors are investing from buying those shares. So in 2024, the company issued 1,155 crores worth of shares, and in 2025, it is 1,425. So nominal increase in equity capital means company is issuing more shares and investors are buying those shares and putting the money into company. That rarely happens that ICICI Bank issue fresh new shares for the investors. That is what equity capital means. Now reserve. What is reserve? Now during the bad times, when let's say in the COVID pandemic or whatever this happens, company keep certain reserve money aside from profit. So now these reserves has been increased to 312,481, right? For any bad thing happen or whatever it is, if there's a payment failure or default or anything, whatever it is, the company keep reserve for these type of events. That is in the liability side. Now deposit means, so this is a bank, right? So deposit means the customer are depositing money into the banks. That is called deposit. So it's a liability, right? Company in future they have to pay them back because it's the customer money that is coming in the business. Now deposit, it has been increased by last year in 2024 it was 1443580. Now it is 1641637. So deposit has been increased. So very good for the ICICI Bank. Now borrowing, the company has been borrowing. So now the borrowing has also increased by 207,428, which was previous. Now it is 21,883. So the borrowing has increased from last year to this year. Other liability, let's click on other liability. Now non-controlling interest. What is non-controlling interest? I'll give you a very simple example, right? For example, let's say you start a coffee shop. You own 70%, 30% your friend own, right? 100 rupees profit you made, 70% will go to you, 30% will go to your friend. That is called non-controlling interest. Last time it was 13,888, now it is 14837. So now the non-controlling interest has been increased in 2025. Trade payables, which means the ICICI Bank has paid to its creditors, which has decreased, by the way. So very good sign. It has decreased 12,819 to 8,970. So good for the trade payables. Next is other liability items. Any other liability, let's say 430,204, it has increased to 444,008. So it's been increase in the other liability, right? So these are the money that is coming in the business. This is how the money is coming inside the business. These are the liabilities that the company have. In future they have to pay them back, maybe not today, tomorrow, but in future they have to. This is how you have to read the liability segment. So now the liability is 236,063 last year. Now it is 2642241. Now let's go to the asset side. Right? Asset means this is where the company is putting their money in. Now the fixed asset, if you look, now building they have increased their asset to 10,298 previous year. Now it is 11,483, right? So their building fixed asset has increased. Now fittings and furnitures, they don't have any furniture, nothing they have, that's why it's 0 0. Other fixed asset, now 19,169, now it is an increase to 28,187. So very positive, the asset has been increasing, right? It's a good for the company. Now the accumulated depreciation, right? Now it's been like 13,752. Now it has increased to 15,398. Very good. CWIP, which means capital working in progress. Company doesn't have any building ongoing, on construction of building ongoing, nothing. So they don't have any capital expenditure. So 0 0. Investment that we have to look into. Previous year it was 827,163. Now it has increased to 886,377. Very good. Other assets 1521186. Now it is at 1731593. So very good. Now the assets are increasing, their liabilities are stagnant. So very good for the company and for the future outlook. So this is the overall picture of balance sheet. I hope you would have learned a lot. I hope you would have taken the notes. Now before we go, I have a very good question for you all. Right? I have a very good question that I want you all to write it down in the comment section. If you look, the total liability here is 2642241, right? And total asset is also 2642241. Why the total liability is equal to total asset? This is a homework for you all. Anyone who will comment down below will get a gift. Promise. Anyone who will do the correct answer without googling will get a gift from me. This is a question for you all, that why total asset is total liability. This is a financial term. If you have not done the CA or not done the MBA, it's okay. But if you know these things, very impressive. My audience are sometimes they surprise me with their knowledge. I'm very happy to have such audience. I'm very grateful to have such audience with me. But this is a question for you all. Why total asset is total liability in the balance sheet? Tell me, write it down in the comment section. And anyone who will give me correct answer and very straight to the point answer will get pinned and get a gift from me. That's my promise. So I'll end the video here. Thank you for watching, and I'll see you in the next video. Bye.